Welcome, everyone. Welcome to the Department of Communications Colloquium. This one is sponsored today by the CCD and the Health Equity Action Lab. For those who don't know me, I'm Amanda Frizz. I'm an assistant professor in the department, and it is my privilege to introduce today's speaker, Dr. Jeff Bennett. Dr. Bennett is professor and chair of communication studies at Vanderbilt University. Prior to joining the faculty there, he taught at the University of Iowa, Georgia State University, and the University of North Texas. His research focuses on health, citizenship, LGBTQ queer studies, cultural studies, and rhetorical theory and criticism, utilizing both rhetorical criticism and rhetorical field methods. His first book, Banning Queer Blood, Rhetorics of Citizenship, Contagion, and Resistance, scrutinizes the federal donor deferral policy limiting queer men's ability to donate blood. His most recent book, Managing Diabetes, The Cultural Politics of Disease, examines the confusing and contradictory public depictions of diabetes to demonstrate how management is not only clinical, but also cultural. He's published articles in leading communication journals, including Communication and Critical Cultural Studies, Quarterly Journal of Speech, and QED, a journal in GLBTQ world making. And he's also edited or co-edited special issues of QED, Review of Communication, and Rhetoric of Health and Medicine. And that last one's a really good issue of that journal to check out. Everyone should go see it, and not just because he included me in it. In 2019, Dr. Bennett was named a Public Voices Fellow at Vanderbilt University. His award-winning work has been described as representing the best that medical humanities has to offer, useful to healthcare professionals, medical educators, and patients, as well as arts and humanities scholars, full of astute analysis animated by buoyant prose and spellbinding storytelling. Please join me in welcoming today's speaker, Dr. Bennett.
Well, thank you. Thank you for that, Amanda, for that very, very kind introduction. I really do appreciate it. And that issue is actually, good mainly because you're in it. And so I'm thrilled that you were able to contribute to it. I also wanted to say thank you to Amanda for organizing this entire visit. We've been emailing back and forth, and I was like, I'll be there in person. Let's do Zoom. I'll be there in person. Let's do Zoom. I ended up having a lot of travel in the coming months, and so that's why we moved to Zoom. But I still appreciate all the work that went into it. And I also want to say thank you to the department for the people with HEAL that have been very gracious in making me feel welcome. I am actually very sad not to be there because I love the Northwest. I know you never hear anybody say that they love, right, the upper Northwest of this country, but Seattle in particular is just such a wonderful, wonderful place. And I'm sad not to be there in person, but very grateful that all of you took the time to be with me today. I am going to go ahead and share my screen. My apologies if there's any slight hiccups here. It's been a little while since I actually had to manage anything on Zoom. I also wanted to say I do not have the most riveting slide presentation here, but there are several large block quotes, and I did want to share those. I won't be reading all of those because you've all had some experience with public speaking. You know you should kind of pick your battles there. But I also went ahead and included a link to a Dropbox folder that has these slides in them. So if I end up zooming past something that you were really interested in reading, you can do that on your own time whenever you like. So feel free to check that out if you want to. Before sharing my screen, though, I just wanted to say a couple of words about this particular project and set up where I'm coming from with it. This was actually a project, as I mentioned earlier to the HEAL folks, that I started becoming interested in pre-pandemic. It is wild to me that Vanderbilt shut down 5 years ago next week. And so the fact that I have taken a very long time coming back to this project was really because of the pandemic in a lot of ways. I wanted to get to some archives. I could not do that during the pandemic. And then after the pandemic hit, because it was related to health, I ended up writing like 4 or 5 pieces about the pandemic, had several other things that I was editing or writing at the time. And so it has taken me a long while to get back to talking about this topic of pre-existing conditions. They often say that all research is me search. This is no exception for me here. I was diagnosed with type 1 diabetes a couple weeks after defending my doctoral dissertation back in 2004. And one of the really unusual things that happened in the years prior to the Affordable Care Act was I found that, as I was switching jobs shortly after degree, I had to make sure I had continuous coverage, or I could completely lose health insurance. And, living with diabetes as a person who has health insurance is fairly expensive. Trying to navigate this disease without health insurance would be a nightmare. I've also been increasingly just interested in the fact that we have never stopped talking about this idea of pre-existing conditions, even though the ACA was passed in 2010 and it is now 2025. That threat always looms, and it is a uniquely American threat. Most countries around the world do not deal with this. What we call pre-existing conditions, they call health history. And so I wanted to look at where this idea came from, and I wanted to particularly look at it in relation to the many populations that have been affected by it over time. Today, I'm looking at one particular population, and that is gay men in particular. I sometimes in this talk use the words queer and gay interchangeably. In the late 1980s and 1990s, most of the news coverage, most of the debate used the word gay, so I tend to use that word as well. I'm aware of the fact that those things are not necessarily always transferable. So I will just say that as a note on language before we begin. The other thing that I just mentioned really quick, I do have a script with me in large part, as I joked earlier with the Heal people. I love the sound of my voice. And if I do not have a script to reel in what I am saying at any one given time, I would keep you here until 2026, honestly. So I'm going to try to do that. Let me see if I can share my screen. And again, please forgive me for any keynote. Oh, it does not. Is my screen being shared at all? No.
No, not yet.
Let's see.
I just made you co-host,
Okay.
so that should allow you to do it.
Okay. Let me. It is just not showing me any of the things I need. Let's see. Nope, there we go. Let's see if that works. Sorry, it's trying to force me to quit. So quit Zoom, and I don't want to do that. So maybe we will just progress without that. If you want to look at these particular slides, though, feel free to open the document using the links. I'm not entirely sure why it's being so complicated. Let me try one more thing. Oh, there we go. Can you see it now?
Yes,
Wonderful.
we
Thank
got
you.
it.
I just had to change the settings so that all of us could share our screens. We probably shouldn't all do that at the same time, though. That would be my advice. Okay. In 1992, at the height of the AIDS crisis, a 26-year-old New York University law student living with a same-sex roommate in Greenwich Village applied for a life insurance policy. The company, United Services Life Insurance, denied his application on the grounds that he had not completed a medical exam required for consideration. The student submitted to the exam, but underwriters again rejected his application because they claimed to have worries about his driving record. The corporation eventually offered the unnamed man a contract, but at more than twice the advertised rates because of supposed blood abnormalities. These results turned out to be nothing more than slightly elevated liver enzymes. Even before the case landed in court, it was obvious that the company had rejected the bid because they assumed that the man was gay and was therefore more susceptible to HIV infection than the average applicant. His zip code, age, roommate, and marital status were not benign markers to the company. In fact, on at least 2 occasions, the agent processing the student's request told his father that they had to be extra careful writing policies for single men living in the city. In 1992, over 33,000 U.S. residents died from AIDS, and about 73% of them were ages 25 to 44. AIDS was the leading cause of death for men in that age bracket, and many of them were, of course, gay. Unfortunately for the life insurance company, the applicant in question was actually heterosexual. The sweeping generalizations about his marital status, his roommate, and his neighborhood all produce false inferences about his identity and his desirability as a customer. The NYU student filed suit against the corporation on several grounds, including discrimination based on marital status and breach of fiduciary duty. The latter was especially noteworthy because the agent involved with the case disclosed the student's medical results to his father, which led his parents to believe he was living with HIV. The man eventually won his case, but his real name was never made public because he believed it would hinder his prospects in a field that was inundated with homophobia. For the purposes of this talk, I find this particular case to be illuminating because it illustrates the degree to which pre-existing condition risks are rhetorically constructed, not because of medical maladies, but because of what constitutes a risk in the imaginations of insurance underwriters. Executives cling to epistemological certainty even when confronted with direct evidence that disproves their claims. In this way, corporate actors work to shape the identities of their clients and steer the potential for profitability and loss. These maneuvers are perhaps most frustrating because insurance firms have long proclaimed that they are acting in the name of the public good, even though they have repeatedly destroyed the lives of countless Americans. Prior to the passage of the Affordable Care Act in 2010, insurance companies utilized the noxiously bureaucratic language of pre-existing condition clauses to naturalize capitalized constructions of risk that protected their profits and disenfranchised people with consequential medical problems. However, a person need not have lived with an actual health condition to fall victim to malicious underwriting strategies. Like the NYU student, a person's assumed identity, occupation, zip code, or even coworkers provided actuarial justification for excluding people from care. These sweeping biopolitical glances at entire populations leave large swaths of Americans uninsured while concentrating wealth in the hands of corporate shareholders. So today, this talk examines the insurance industry's creative exploitation of people in need of care and the way such entities rhetorically redlined those they situated at high risk of HIV infection in the 80s and 1990s. Amid the AIDS crisis, the insurance industry fabricated an accompanying calamity by excluding those most in need of care. Queer communities were positioned as inherently cataclysmic to the economic well-being of the national health insurance industry, even as medical interventions that might save their lives were positioned as out of reach. I argue that bureaucratic constructions of risk engendered a moralistic drift built on an ableist foundation to situate queer communities in harm's way. Paradoxically, however, these policies subverted the ways individuals were expected to minimize the impact of risk by insinuating that they had no agency over their health to start. So as a preview, in today's talk, I delineate a short history of pre-existing conditions clauses and tie them back to bureaucratic constructions of risk. From there, I explore how insurance companies attempted to redline gay men at the height of the AIDS crisis. Even though I am most focused on the late 1980s and early 1990s, at different points in this talk, I also refer to a 1940 text titled Accident and Health Insurance by Edwin J. Faulkner. Faulkner was president of the Woodman Accident Company, which is now known as Assurity, based in Lincoln, Nebraska. The book was widely circulated and is still cited today, sometimes by scholars that I actually really love. And I use this book to illustrate the long reach of these terrible corporate practices. Before I begin, I also want to just quickly define two terms to make sure that we're all on the same page. And those terms are underwriting and redlining. Underwriting refers to the process of selecting risks and classifying them according to the degrees of insurability so that monetary rates may be assigned. Redlining is typically understood as the discriminatory practice of denying people access to credit because of where they live, even if they are personally qualified for contracts such as loans. As many of you likely know, mortgage lenders once widely redlined urban neighborhoods where Black people lived. Redlining's meaning has expanded to cover many exclusionary practices, including one I'll talk about towards the end of this presentation, occupational discrimination. So just, really quickly, I want to just pause and mention this 1940 text again. So much of this talk is less theoretical, which is often usually more my bag, and a little bit more historical in nature. I've spent a lot of the last few months just trying to delineate where this idea came from, and it's a little bit complicated, and so I did want to spend a little bit more time on that. I get to some theory later on, and I'm always happy to talk about theory about risk or gender or sexuality. So we can definitely deal with that more in the Q&A if we have to. Okay. So attempting to locate the origins of pre-existing conditions clauses in insurance policies often feels like an exercise in futility. The first public print mention of pre-existing conditions as they relate to insurance is often attributed to a 1947 newspaper article in the Reno Evening Gazette. The term is used positively in this inaugural mention to advertise that such conditions which were once seen as taboo could be treated under new state health insurance plans. The Nevada State Medical Association had authorized a prepayment plan that covered surgical and hospital expenses. It was accepted by 90% of Nevada physicians and was seen as particularly forward because it covered items not generally insurable under other policies. These services included electrocardiograms, basal metabolism rates, complete clinical and pathological labs, X-ray services, quarantinable diseases, and maternity benefits. However, there was an asterisk with maternity benefits. The plan required that man and wife be insured for 10 months before such coverage kicks in. And there's a lot we can do with those few words of man and wife must be insured for 10 months. And that also kind of aligns more with how we might understand more contemporary understandings of pre-existing conditions clauses that omit people from care. While it is tempting to situate 1947 as the emergent point for pre-existing conditions clauses, the genealogy of the term is decidedly more complicated. Insurance plans have always included exceptions, and such exclusions certainly predate our contemporary understanding of health insurance, which is less than 100 years old. In the early 20th century, people did not generally go to hospitals because there was little reason to. Hospitals became more in demand after technological innovations, including machines that were far too large to be mobile, were located behind their walls. Further, urbanization meant people were living in smaller quarters, and hospitals offered spaces to stem the spread of disease and an environment for healing. At the time, most people who bought insurance were more concerned with lost wages from missing work than they were from paying for medical treatments. As such, folks were more prone to purchase accident or health insurance to cover pay gaps. The most recognizable form of what we might think of as health insurance was started by Baylor University Hospital in Dallas in 1929, when a group of teachers paid a flat rate for 21 days of hospital services. In short, the very nature of health insurance evolved rapidly, especially between the years 1930 and 1950, and as it grew, it borrowed language strategies from other forms of insurance to minimize risks and protect profits. And just so to kind of reinforce this a little bit, in 1940, less than 10% of the American population had what we would consider health insurance. And 10 years later, in 1950, about half of Americans. had health insurance. You might know, if you are a student of history, that important things happened between 1940 and 1950, including a world war. Congress passed the Stabilization Act to prevent large increases in wages. But one of the things that they did in order to allow companies to be competitive was that did not include fringe benefits such as health insurance. And so a lot of companies started incorporating healthcare after the Stabilization Act because they were trying to find a way to be competitive and attract workers. And so within 10 years, we had this massive industry that was still trying to figure itself out in a lot of ways developing. Okay. So we can find fragments of what eventually morphed into pre-existing conditions clauses scattered in policies from the late 19th and early 20th century. The rise of industrialization rapidly altered the relationship between work, health, and insurance, and trying to ascertain when injuries should be covered could be complicated. One of the injuries that comes up repeatedly in this literature is that of hernias. So if you look at this, this is from the 24th Annual Report of Commissioners in 1909. I'll draw your attention to this third bullet point. And if you can't read it, it says, finally, the description of the hernia given by the physician after his examination must naturally give no reason to doubt that it arose a very short time before the examination. So this policy from the 1900s never uses the term pre-existing condition, but the language certainly attempts to demarcate when such injuries will be covered. The heterogeneous nature of insurance policies, the shifting terms that define particular kinds of insurance, and the variable lexicon to describe pre-existing conditions all hint at where pre-existing conditions clauses came from, even if a precise origin point remains a bit evasive. Now, sorting through health insurance brochures and industry texts, we find evidence that insurers were always concerned with those people who posed, quote, high risks and had the potential to spike costs. Turning to the Faulkner book now, as he says, the first step in the underwriting process is the selection and classification of risk. Some risks are uninsurable because the hazard involved is too high to be underwritten successfully. These must be culled out and rejected. Others, which are acceptable to the company, must be judged from the standpoint of the degree of risk they represent in order that they may be properly classified for rating purposes. He goes on to name contributing factors such as race, medical history, and so-called moral hazards, which are especially pertinent to this talk. It is important to remember what record collecting looked like in 1940. It was not very exact. Underwriters often had to interpret from a single interview or application the supposed well-being of an applicant, and the process itself was often cursory, subjective, random, and patently discriminatory. It will come as little surprise that the supposed high-risk populations invoked in conversations about insurance, both then and now, are not benign descriptors of existing liabilities. As Jonathan Cohen notes, insurance companies often denied coverage to African Americans by applying their actuarial criteria more strictly to non-white applicants or soliciting business only from those customers where minorities were not present in large numbers. Again, this is readily identifiable as far back as 1940 in Faulkner's text. He writes, and I'll only read parts of this long quote, "Race and nationality are important factors in selection. It is the usual practice among commercial and industrial insurers to underwrite only members of a single race. The underwriting problems involved in attempting to insure members of more than one race would be considerable, owing to differences in physique, temperament, habit, and environment. Generally speaking, when race is a factor in underwriting, particular consideration should be given to the occupation of the applicant. If the amount of indemnity applied for is large, or if there is no distinct need apparent, it suggests a speculative element." So, just dripping with racism, there's no doubt when you read this particular text. But insurance has always been defined around thinking through these classification of risk categories, and those are almost always connected to particular kinds of bodies that are seen as too excessive to be safe to insure. So again, such profiling has been a longstanding practice among health insurers and has disproportionately affected people with disabilities, women, racial minorities, and LGBT people, all of whom are imagined as cumbersome bodies rather than subjects worthy of care. And supposedly risky bodies are often transposed into the category of pre-existing conditions, even if such classifications are seemingly nonsensical. For example, sexual assault and domestic violence have been included among the malfeasant categories of pre-existing conditions. Such anecdotes illustrate that risk and access to care are two sides of the same coin. The ways one is discursively and materially defined alters how the other is enacted. And with that, I want to turn more closely to this idea of moral hazard. Along with demographic consideration, underwriters have also traditionally made judgments based on so-called moral hazards. Faulkner tells us that moral hazard is a necessarily broad term loosely including those intangibles which cannot be classified definitely, but whose existence removes a risk from the standard group. Moral hazard reflects the risk or chance resulting from the failure of the individuals who are or who have been affected by a policy of insurance to uphold the accepted moral qualities. It has to do with the attitude of the insurance buyer towards the policy he is applying for, whether he regards his insurance as protection or as a means to an income. Moral hazard is basic in all insurance underwriting. No single factor equals it in importance in determining the acceptability of the risk. And again, underwriters were the people who were solely responsible for determining who was a moral hazard and who was not. And so you end up with the wrong person who decides that you are not worthy of care, and they could jettison you from that. And again, when you're talking about the 1940s, that is going to leave a lot of people out of an acceptable application pool. The tensions between a classificatory risk schema and vague proclamation about morality should certainly give us pause because it is the underwriter alone that decides how much of a risk one is based on any number of subjective categories. Although a category such as sexual orientation would not have been given explicit attention in 1940, that does not mean that queer people are not, to some extent, at least alluded to in these texts. Faulkner himself seems to nod towards queer people deep into this very long paragraph. He says persons who are not in tune with society are due for minor and major collisions as they go on their way. They are the neurotic types, at the mercy of moods and often aggravated by physical defects or hot-tempered pugnacious individuals in occupations not suited to their temperaments. They include the outright undesirables, the sex perverts, the adulterers, panderers, racketeers, confidence men, and gamblers. In their ranks is the person who enjoys poor health and leans upon the insurance company to finance his self-indulgence. The worst cases are not the out-and-out crooks, but the investment buyers who, though usually law-abiding citizens, feel they should get back more each year than their premiums, and the weak sister who goes to bed with the slightest pain or sniffle. One thing I do want to mention stylistically here, by the way, this is a remarkably dry book. I mean, it is literally telling people how to operate insurance underwriting. But every once in a while, you hit these flares, and they're just really stand out because it is otherwise just, a very bureaucratically inflected text that is just trying to give people some guidance on how to do this particular job, albeit, of course, we would ideally do it very differently today. I draw attention here to sex perverts because the chapter I'm working on is most concerned with the rhetorical construction of gay men as too risky to insure. But that doesn't quite go far enough. From Faulkner's time to today, queers have been positioned as catastrophic to health and wellness. Our sexual practices are seen as contaminating both the public and private spheres and always in need of ever more regulation. The panic surrounding the COVID-19 outbreak among gay men in Provincetown in 2021, as well as the rapid spread of monkeypox in 2022, points to the panic that continues to define queer life, despite the community's very swift response to both of those crises. In this way, queers represent a kind of moral drift, wherein their sexuality might commingle and ultimately overtake the capitalist wonder of health insurance. I draw here from Jay Domage's notion of disability drift to think through the rest of this talk. According to Domage, disability drift is the practice through which disabilities are equivocated and integrated. As he notes, a person in a wheelchair is often treated as cognitively or even psychologically disabled, even when they are not. Our colleague Joe Shu, who is the inspiration actually for my idea of moral drift, has taken up the idea of disability drift and forwarded the notion of affective drift to explore how anti-trans activists use feelings rather than reasoned arguments to forward regressive legislation against gender nonconforming people. I nod towards moral drift here to suggest the way queer sexualities are so seemingly uncontainable they need to be isolated by any means. This often includes tactics like those mentioned at the start of this presentation. But ironically, even as such measures were taken, these same representatives often shied away from explicitly naming their exclusions in the 80s and 90s for fear of being labeled discriminatory. Speaking of that, in the mid-1980s, insurance companies were searching for ways to deny claims to gay men who were at elevated risk for HIV infection. In 1985, a spokesperson for the nationwide insurance company stated, "If an applicant is a potential homosexual, the underwriters have ways to find out. We can deny coverage. We wouldn't tell them why. We would just say they didn't qualify." Such proclamations received pushback from LGBT activists and pro-gay politicians, some of whom went as far as calling insurance company policies a, quote, "form of eugenics that will result in a marketplace premium for Aryan perfection and second-class treatment for everyone with any predispositions to any illness at all." Now, it is impossible to overstate the panic that AIDS initiated in the insurance market in the 1980s. In 1987, the United States Public Health Services speculated that the annual cost of treating AIDS patients could reach upwards of $22 billion by 1991. So within 4 years, they were expecting maybe upwards of $22 billion in expenditures. Insurance officials estimated that the annual total cost to their industry could be well over $10 billion. A couple of years later, in 1992, some industry executives feared that they would be doling out $50 billion annually in death benefits by the year 2000. But these numbers never materialized. In 1991, the total estimated cost of healthcare for all U.S. AIDS patients was between $2.2 and $8.5 billion, which is itself, by the way, a remarkably large spread, right? The fact that we are estimating still between $2 billion and $8.5 billion is kind of amazing. By 1994, group health and life insurers paid around $1 billion in claims stemming from AIDS, and by the mid-1990s, analysts argued these statistics provided yet more evidence that AIDS-related claims, while costly, are unlikely to ever pose a threat to the solvency of the commercial insurers. Still, insurance providers often doubled down. One representative for Northwest Mutual Life Insurance Company insisted they were not discriminating against gay men. He argued that his company charged higher premiums to applicants on the basis of health considerations such as high blood sugar and high blood sugar and lifestyle factors such as smoking. He contended that they should be able to deal with AIDS in the same way they deal with any other disease. Insurance executives frequently equivocated the insurance industry's right to make profits with gay men's right to live, and the press often parroted these talking points. One writer for the New York Times reported that apocalyptic language is being used by both camps. A representative for the Health Insurance Association commented, "Stripping insurance companies the ability to assess risk literally rips out the foundations of insurance and marks a very dangerous precedent that could ultimately destroy the industry." Some writers went as far as parsing fair discrimination from quote unquote unfair discrimination. But because insurers did not want to be accused of discrimination, they often found creative ways to inhibit coverage. As the example at the start of this talk suggests, zip codes, marital status, and one's beneficiaries might do the trick. At one point, an insurance company refused to provide coverage to anyone living in the entire city of San Francisco. Several other insurance companies refused to sell policies in Washington, D.C. I'm going to, for the sake of time, not read every single instance of discrimination, but you find this all over the country, from California to the East Coast, where you have these instances of gay men who are being denied insurance for all of these very random reasons. Now, just as one's zip code could filter out their ability to receive care, so too might one's occupation. Again, this is not a new development. Faulkner notes a range of professions too risky to cover in his 1940 tome, and these include acrobats, wild animal trainers, chemists manufacturing explosives, secret service agents, and war correspondents, among many, many others. Historically, it has been common for firms to deny coverage to particular kinds of businesses. This might include high-risk fields such as logging and mining or drilling for oil and natural gas. But it also sometimes includes less dangerous occupations like nonprofit organizations or car washes. Generally, insurance companies have attached particular risks to the occupations to dismiss applicants. For example, they have argued that there are higher rates of alcoholism among people who work in bars, so they won't cover them. One company crafted health insurance policies for bakeries and confectionaries, but considered them ineligible for dental care. And pertinent to this study, several companies denied coverage to businesses that were imagined to support a disproportionate number of gay men. This includes restaurant employees, antique dealers, interior decorators, florists, and fashion industry workers. Small businesses were among those most vulnerable to being denied health care plans. Sometimes providers refused to sell insurance even if one employee was at risk of a serious medical complication such as HIV. A survey of group health insurance plans found that one of the businesses most likely to be denied coverage were hair salons. In fact, of the dozens of businesses researched, hair salons were the third most likely to be refused coverage. The first was physicians, because they actually used medical coverage. The second was small law firms, because they might be litigious. And then the third was hair salons. The authors of that study noted that about 2/3 of the companies virtually all of the agents surveyed admitted that their company excluded certain types of businesses from coverage. Hair salons were listed as a triple threat because of a higher employee turnover rate, a high proportion of childbearing women, and a high proportion of gay men in their workforce. In one 1991 incident, 2 Chicago salon owners attempted to obtain health insurance for one of their employees from National Group Life Insurance. But corporate representatives implied that they did not cover businesses that employed large numbers of gay men. The agent involved never used the word AIDS, opting instead for the euphemistic phrase current health situation. Additionally, in a widely circulated press release, the company offered the following explanation for why they denied services. They said, in the case of a hairdresser, exposure to chemicals such as bleach, peroxide, and dyes increase the risk of skin conditions. Inhalation of small hair fibers can lead to serious respiratory conditions. Standing for hours at a time can lead to circulatory conditions, especially in the legs. When an Illinois human rights organization asked the company for written evidence supporting the contention that hairdressing is a high-risk occupation, the company offered no numerical data and merely mentioned factors such as noise, dust, air pollutants, job stability, income stability, whether the job is primary or secondary, part-time or full-time, or seasonal. So they were invoking evidence that felt plausible to them, even if it made no logical sense. Further, I should point out that stylists actually take off less time for illness in industry than those in the general national workforce. National Life Group Insurance eventually agreed to cover the employee, but a 20% surcharge. Like the NYU student at the start of this talk, however, that employee was again heterosexual. To say again, the biopolitical glancing at an industry, its workforce, and its presumed risks was not merely descriptive, but constitutive of a non-insurable identity. I part here with 2 just brief conclusions, and rather than read them for the sake of time, because I do want to get to questions, I'll just kind of mention them. The first is that, while I'm focusing on sexual orientation here, there is no doubt that this is actually also about class. All of the occupations that I looked at when we start talking about like restaurant workers or hair salon workers, or people in some of these other contingent jobs, these are blue collar working class jobs in a lot of ways. They did not go out of their way to look for like gay men in other kinds of industries. So the kind of stereotyping and the schema that is created here is problematic for so many reasons, even for the late 80s and early 1990s. The other thing that I should mention is that scholars such as Deborah Lupton tell us that risk has been increasingly privatized, that kind of in our neoliberal moment, I think there's good evidence that neoliberalism is kind of on the wane. that we are all kind of encouraged to monitor the kinds of risks that we take. One of the things that's interesting with this is that it implies that it doesn't matter how well you are at averting risk. It doesn't matter how many safety measures you take to prevent HIV infection, that you are just inherently high risk. And there is something about that that works counter to a lot of the scholarship that we have there about risk, precisely because certain kinds of identities always performatively overrun kind of ideas about how risk might actually transpire. Okay, I'm going to stop there so that we have a little bit of time for question. I'm sorry, a little over on that, but I welcome and encourage your feedback. I will also stop sharing the screen.
Thanks so much, Jeff. That was really, really good. One of the things that I noticed on a couple of your slides, and I think they were from the Faulkner text, the 1940 text,
Yeah.
was this assumption that people are trying to game the system, right? People who feel they should get back more each year than their premiums are people who are excluded, or people who in the moral hazard section are identified as getting insurance not as a protection against risk, but instead as a way of making money. And I'm wondering if that is also aligned with this attempt to really exclude gay people who are, being presented or understood in the public as people who are lying about who they are, being deceitful.
Yeah, absolutely. I think that's a great point, and I love that you made that connection. Actually, it is a reoccurring theme in the book. Actually, there is always this assumption that people are going to buy into the system. Sometimes even for reasons that make perfectly sense for the rest of us, probably. But like if you are somebody who is just, you might have a health condition, right? And you're like, I need to have health care. In the industry, they call that adverse selection, right? And they work really hard to try to prevent people from buying into plans precisely because they are high risk. But one of the things that's really fascinating in all of this coverage and in all of the media reports, in the law reviews, there is this acknowledgement that technology around HIV/AIDS at the time was shifting very dramatically, and that by actively excluding gay people who might want this insurance because they want to make sure that they can get regular checkups just to kind of check their status, there is this kind of suggestion that not giving them coverage is going to exacerbate a crisis. The insurance company constantly makes these claims that it is not fair to them, that people do not kind of, if we can be Codian for a second, they don't, kind of confess everything to the underwriter, so that the underwriter may make this determination. It is definitely often positioned as this cat and mouse game, and certainly gay people in this particular set of literatures in particular are very strongly implicated in that in various ways. It is also kind of remarkable to me because some of the assertions also just sometimes don't make sense about people who might want coverage. At one point, I can't remember if it's in the 80s literature in the Faulkner book actually, and this tells you a lot about the ways that some of these themes continued over the decades. They claim that like restaurant work is not hard labor, and I'm like, my gosh, have you ever worked in a restaurant? Like it's just it's really kind of mind-boggling. But yeah, that's a great point, and one that I want to make more explicit, I think, moving forward, because there's always this sense that the insurance industry is being gamed in some way, and they need every tool at their disposal to kind of save money, or they're just going to implode, even though that never happens. Yeah, Amanda, please.
Gotta unmute. So, and kind of piggybacking off of that, then it's also interesting to me that the insurance companies simultaneously say it's unfair that they must insure everybody if they cannot make a profit if they do. And yet, all of the other countries that have socialized medicine seem to have figured out that this is why it's important to have a government agency that is providing that kind of coverage, because the scales that governance can do that at helps to equalize coverage. And so then only people who have more disposable income, or who might be less risk, but are buying into the insurance. It seems like that would maybe be an argument in favor of what was tried to be accomplished through the ACA. And so I'm wondering if you could maybe speak a little bit more to that, about how some of the frustration that companies had in the mid-century with insuring everybody, and then the stark resistance against government providing that kind of insurance in the 2010s.
Yeah, absolutely. I mean, I completely agree with you, right? I mean, one of the things that's always been really counterintuitive in some ways about, I mean, it's not counterintuitive, but the private insurance industry, it also costs more money, right? So, you know, you may have heard the line that the United States spends more money than any other country, I believe globally, on medicine, and we actually have worse outcomes than most other countries do as well, precisely because of the system that we have set up. And this is to say nothing of the fact that, you know, medical bankruptcies still, I think, number around 550,000 people a year in this country. And that means that about 2/3 of all bankruptcies are medical, are because of medical reasons. And, you know, health insurance is not the only reason for that. You know, I should be very clear about that. Part of that has to do with just the high costs, for example, that hospitals are enabled to kind of bury. If you've ever gone to the hospital and you get the list of charges, you're like, what? And then, you know, you call them and magically like 50% of that number can go away. It's very strange. But you know, the fact that we have this large number of medical bankruptcies every year is just, you know, more proof that I think a system like that would actually be more advantageous. You know, I will confess to you, I'm very, very worried about the ACA right now, and what's going to happen in the coming years. You know, I have a 24-year-old nephew, for example, that's on, you know, my brother's health insurance, and my nephew just quit his job, and he's just like, it's fine, I've got health insurance. I'm like, you never know. You know, it's so many of these things can go away, and we absolutely need to have a better safety net because of all this. One last thing I would say about that. It's really, really interesting to me. A lot of other countries that have universal health care, you know, you take a place like the UK, or you take a place like Germany, they actually have their systems in place because back in the early 20th century, the leaders of their company or their countries were actually really worried that socialist or communist appeals were just really appealing to the people that live there. So it is kind of interesting that other countries actually have universal healthcare precisely because of socialism and communism, and because those leaders really wanted to stem the tide of those political ideologies becoming a little bit more appealing. You know, the way that our discourse has developed around healthcare in this country is decidedly different. And every time we want to kind of move to that kind of system, of course, you hear these charges of communism. I'm always like, that's not quite right, actually, and how it's being developed. But it's a great point, and one that I will be talking a lot about. Ideally, when this piece and other pieces like it, if other pieces like it, come out eventually. Now, please, Carmen.
Yeah, Jeff, this is reminding me about the rhetoric around GLP-1s right now and all of the access disparities that we're seeing. I'm wondering, especially as someone with type 1, if you have any thoughts on that.
Yeah, absolutely. So you're talking about medications like Ozempic, of course, right? I will confess, I'm fairly in favor of these things. Like if people want to take them to improve their health or even to look better, I personally don't necessarily have a problem with that. I actually think making those kinds of things more accessible could save us a lot of money down the road. One of the things that you learn when you study diabetes, and especially when you start talking about type 2 diabetes in particular, it's a very expensive disease, right? Because of heart disease, because of amputations, because of blindness. I had an uncle who died last month from type 2 diabetes. He had to have a partial amputation. He just couldn't bounce back and recover from it. And I can't help but think if he had access to a lot of these things, he was, very blue collar man living in Port Huron, Michigan, right across the bridge from Canada, right, where healthcare is a little bit easier to navigate in a lot of ways. I can't help but think that a lot of the problems that he encountered in his life, he was, I think, only 65, could have been avoided. So I am absolutely 100% on board with this. It is interesting because I do wonder about some of the economic implications of those particular medications, just in terms that Denmark, Novo Nordisk is just they're making a killing right now off of these things, and largely because of Americans using all of them. We have to remember sometimes that we're one of the few countries in the world where there is direct to consumer advertising. We've all heard the Ozempic song, right? And it's interesting. A lot of people who work for Novo Nordisk over there have never even heard that song, right? Like they have no idea what it is. But their economy is just gangbusters right now because of this. It's also creating some tensions in that company because, of course, they are one of the 3 companies in the world that produce 90% of fast-acting insulin. And some type 1 diabetes communities, Eli maybe has heard this a little bit too, may have heard that they might scale back a little bit on the production of something like Novolog, precisely so they can continue to manufacture some more of those medications. The company insists that like T1Ds are like they're tried and true people, and that they would never leave them behind. But they're opening more plants to produce more of this medication. And again, so many unknowns, with the new health secretary there. I don't know if Kennedy, who has not always been in favor of these medications, is going to keep staunchly supporting. But I will also say a lot of people are using these, and they tend to transcend political ideology. So we'll see what happens with all of that. Yeah, please. Sorry, I can't see.
Yeah, that's okay. Hi.
Yeah.
Not so much a question, but a comment. One thing that kept sort of popping in my mind is insurance in general is basically legalized gambling. And just as bookies and casinos adjust the rules and adjust the odds to make sure that they make a profit, we shouldn't be surprised that insurance companies want to do the same thing. And again, it's this way that insurance has become so integral with healthcare that is what is causing the crisis.
Mm-hmm. Oh yeah, absolutely. And this again has been a problem that's been with us since kind of the beginnings of American health insurance, really. And again, almost predating some of what we would consider the American healthcare system. One of the reasons that healthcare never came to be in this country is that back in, I'm trying to remember if it was the 30s or the 40s, when there were certain kind of groups and political factions that were trying very hard to make a universal system. One of the things they were going to include with it were death and burial benefits. benefits. These were a really big deal because at the time, again, burying somebody as it is today was expensive. It was something that came at a really high cost. And so that particular industry fought like the universal healthcare bill, precisely because it was also going to include death benefits. There were certain other things. Leah could probably speak to some of these things better than I. You're probably much better with history than I am, but we know sometimes they tried to attach universal care to certain bills, and people like FDR, because he was much more concerned about passing Social Security and other programs like that, was never a staunch advocate. He thought he could only do so much with kind of the Congress he had, and so he had to draw back. But it's a great point, and I love the metaphor of the casino. Honestly, I think there's a lot that we could do with that. And again, this has kind of always been a feature of our system, and it is not one that is generally worked in favor of consumers. Please. I don't have my glasses on, and so reading everybody's names is a little complicated. I've hit that age where like,
The names are pretty small. I'm Leilani. Hi. So when I think about the AIDS crisis, I often think about like ACT UP and all these groups that got organized. And I remember most of the protests being about research, funding for research. I don't remember very much discussion about insurance. And so I'm just wondering, was there protests around insurance, and like what kind of rhetoric did they use for that?
yeah, absolutely. There was. I don't know if it was always necessarily at the forefront. Excuse me. And one of the reasons I really appreciate your question, I will say, is that, health insurance is, and this is one of the points of the project that I'm really trying to work on. It's such a bureaucratic rhetoric, right? Like it's just not exciting and it's not fun. And when we talk about a group like ACT UP, we want to talk about like all these big colorful posters, or we want to talk about the demonstrations like at the post office the night before taxes were due, or we want to talk about their takeover of the stock exchange. But there were definitely a lot of groups that were doing work to try to make sure that people received care. I was thinking about this question a little bit the other day because I see so many calls right now from people to start thinking of mutual aid networks in the event that the safety net is just pulled out from under people right now. And you found a lot of the same kind of rhetoric back in the late 80s and early 90s when the system would not step up and protect people. A lot of queer communities, doctor groups and their allies tried to do some of that work as well. It's one of those things, and I need to study this rhetoric a little bit more closely before I start talking definitively about it. It always seems, I think, especially to the audience, they're appealing to be very commonsensical, right? Like if you can access medicine, you should get it to people if you can. I will say, the government was not always very quick to act on these things. Because many of us know the history of the Reagan Bush years when it came to LGBT folks, and so sometimes there was a really hard climb moving upward, and that rhetoric changed a little bit because, of course, for a while we didn't really know how to best treat HIV, or if it ended up evolving into what we then called AIDS. Yeah, it was definitely something that people were thinking about, people were working on, but you're right, it has not gotten as much, I think, attention as maybe some of the other things that people were looking at. I thought I saw one hand. I don't know if oh, somebody was taken off. That's all. It's okay.
Well, I think if there are no other questions, we're right at time. So please join me once again in thanking Dr. Bennett for his time and his wonderful presentation. Very much so excited to hear your talk, and it's very generative as well. I was taking mad notes the whole time. So thanks so much for your time and greatly appreciate you.
Absolutely. And like I said, I'm just getting this project off the ground again, and I cannot tell you how much I appreciate having an audience to engage ideas with. For the hellscape that we're all living in right now, this is one of the true benefits of kind of like being in the academy and doing what we do, is just having the chance to kind of talk about ideas. And I really appreciate your time and your effort and your attention and engagement.
Thank you all. And thanks everyone for coming. We appreciate you as well.